Time now for a look at the day's business news. Stephen Carl is with us in studio. Good day to you again, Stephen.
Hi, Eve.
Stephen, we're going to start there looking with these creditors that are once again going back to Greece.
Yeah, that's right. The clock again ticking now for Greece to get an agreement on this new €86 billion bailout. Officials say the deal needs to be done by as early as the 11th of August, and that's to allow Greece to make a payment to the European Central Bank that's due on the 20th. That's a payment of €3.2 billion. That's important, like the one that we were talking about last week. And it's important because if Greece doesn't make the payment to the ECB, it risks forcing a collapse of its entire banking sector, because the ECB is giving these emergency loans to Greek banks. It's essentially keeping them in business for now. Of course, looking further ahead, they've another around €1.5 billion due to the IMF in September as well. So that deal really does need to be done as soon as is possible. Now, the officials that have gone to Athens today, those talks beginning either today or tomorrow, they're being described as mid-level officials from the European Commission and from the European Central Bank. And their job is to get into the Greek government ministries and to decide both how much money Greece needs, but also what sort of reforms are going to be demanded in exchange of those. And it's expected to be fairly tough discussions over reforms and deciding what essentially austerity measures Greece is going to have to implement in exchange for that new bailout. The Financial Times reporting already that there's disagreement over which government ministries they're going to have access to. So I'm sure it's something we'll be hearing plenty more about.
And I have to say, I just couldn't imagine it going smoothly, Stephen, I have to say at this stage. This all happening while the stock exchange remains closed and the banking, which, as you say, is existing on emergency aid, it's still subject to limits.
Yes, that's right. The stock exchange, first of all, we had expected it to open today. We now expect it will be able to open tomorrow, but that's not been officially confirmed yet. But as you say, yes, the bank's still subject to capital controls. Greeks are still able to only withdraw €60 a day from their bank accounts. The limits on foreign bank transfers have been eased somewhat, but they're still in place, and that's creating a really difficult situation for Greek businesses, because if you're trying to buy anything from abroad, you can't pay your suppliers. And many Greek businesses, we've heard from them here in France 24, have complained that they're being essentially suffocated by these capital controls as well, which are in place since the end of June. So coming up on a month now since those controls were put in place. Dismantling them is going to be very difficult. We heard from the head of one of Greece's biggest banks that to lift capital controls, the bailout agreement is going to have to already be in place. To have that confidence, those banks need to be able to reopen fully and operate in a normal business environment. They're not going anywhere anytime soon, and those situations still remaining very difficult for people in Greece.
A bit of a vicious cycle going on there. Well, take us through now what's happening on the markets.
We'll start first of all with the figures here in Europe, which have just opened up. Main European share markets all opening down. London's FTSE 100 just flat, as you can see. Oil and gas shares generally not doing very well today. This on the back of low oil prices weighing on their fortunes. Over on the Asian markets, the Chinese markets are in meltdown again today. Shanghai Composite seeing its biggest one-day drop since February 2007. As you can see, down over 7% there. We've seen the government try to step in to try and calm down the Chinese markets. It worked for a while. It doesn't seem to be working anymore. The latest plunge on the Chinese markets being driven by fallen industrial profits. It looks like we're back into free fall territory in Shanghai. That's a pretty dramatic drop in just one day.
Yeah, definitely not a good start to the week over there. Well, the price of oil next, let's have a look at that. It's having an effect on the industry's big players.
Yes, according to a study from the consultancy firm Wood Mackenzie, the biggest energy groups in the world have shelved $200 billion worth of spending plans over the low price of oil. The research says that 46 major projects have been postponed by the likes of BP, Royal Dutch Shell, Chevron and Statoil. Now, after rallying earlier in the year, the price of oil on the Brent crude index has plunged again in recent weeks by some 20% since May. The renewed slump being prompted by the decision by the oil cartel OPEC not to cut production, as well as fears over slowing demand from China. We'll move on next to some of the other business headlines of the day. US safety regulators have fined the carmaker Fiat Chrysler a record $105 million over failing to properly recall millions of faulty cars. The company will now offer to buy back more than 1 million affected vehicles to encourage owners to get the necessary repairs. The models affected include Jeep, Dodge and Chrysler. The Swiss bank UBS has seen its net profit rise by more than 50% in the 3 months to the end of June, the boost mainly coming from its private banking division. The lender was forced to publish its results a day early after details were leaked to a Swiss newspaper. Shares in the bank, though, down some 1.5%. And profits took off at Ryanair too over the 3 months to the end of June. The low-cost airline saw net income jump 25% to €245 million. The number of customers also rose to 28 million over the 3 months. Investors not impressed though, shares down almost 2%.
And finally, if you did invest in Amazon, well done. If, like me, you didn't, Stephen now has some pretty depressing news.
Yes, very depressing, in fact. Amazon shares spiked on Friday after their most recent set of results, up 10% to around $530 a share. Now, that added about $22 billion to the value of the company, making it the 11th largest on the S&P 500. And it surpassed Walmart for the first time, so an online retailer taking over perhaps the most iconic traditional retailer in the United States. But also, if you'd bought shares in Amazon back in 1997 when it first listed on the stock exchange, your investment would have increased in value by more than 26,000%. Even in the past year, shares in Amazon up 70%. I regret.
You had to put in that even in the last year, so I couldn't just say, well, look, 1997, who was thinking about that? Okay,
Neither you nor I.
Neither you nor I. Still not, Stephen. Stephen Carr there with the Business News. Thanks indeed for that.